My name is Patrick Sheridan, and I am excited to present to you an investment pitch on some stocks and sectors that I believe are well positioned to perform well during the course of 2023. Now, to get us started, let's take a look at the economic outlook for 2023. And first, we'll take a look at the global outlook. So, the global GDP forecast is 2.2%. The emerging markets, including BRIC countries, specifically Brazil, India, and China, are countries that are projected to lead some of the growth during 2023. The Euro area economy is projected a slight contraction as they deal with high inflation and other issues from the war in Ukraine. And markets are likely to experience volatility this year as the war in Ukraine, high interest rates, and inflation continue to take a toll on the markets. As for the outlook for the United States, the GDP forecast is 0.2%. However, there are groups who are more bullish than this forecast, including Morgan Stanley, who have an estimate of 0.5% for the United States GDP. And the pace at which interest rates rescind will be key in determining the GDP growth for the year. Then another noteworthy thing is to look for possible new market leaders, as this is common at the end of a bear market. So we may see some new leaders at the top of specific sectors. As for some industry outlooks, the financial institutions sector, higher interest rates are a positive for financial institutions. So this is one reason to get in this, and this is one of the few institutions or sectors that has benefited from the higher interest rates. However, challenges in mortgage and auto loan markets ate into balance sheets in 2022. The hope being that as the economy strengthens this year, mortgage and auto people will be looking to take out more mortgages and auto loans, and this will help banks bounce back. And as consumers' spending comes back, banks are positioned well to earn more revenues. So that touches on what I just talked about. Now, another sector that I think is going to be good to be in this year is the travel services. So travel expectations for 2023 are uncertain due to a lot of the aforementioned issues in Ukraine, inflation, interest rates, etc. Travel from 2021 to 2022 increased somewhere between 90 to 140%. So obviously this was quite the increase, as we have seen travel continue to grow since the 2020 COVID downfall. A decrease in travel is not expected to bring travel back to 2021 numbers, so we can expect that even if 2023 sees a decrease in travel, these numbers will still be higher than they were in 2020. And as Deloitte mentions, that undertapped opportunities and pent-up demand still exist, so provided that the economy performs well this year, we could still see an increase in travel. Now, as for a couple companies that I like in these sectors, one is JP Morgan Chase & Co., ticker symbol JPM. Their return on equity is 12.85%, return on assets 1.02%, and earnings per share of 12.09. Their stock performance for January 1st of 2022 through the end of the year was a loss of 16.35%. Reality is that last year was a very tough year for the markets and just about the majority of stocks, as the issues mentioned, inflation, interest rates, war in Ukraine led to a lot of uncertainty and volatility in markets. However, as I mentioned, banks should be a good place to be in 2023 as the economy bounces back. Airbnb Inc., ticker symbol ABNB. Their return on equity is 32.61%, return on assets of 6.96%. You may notice that these numbers are much higher than those of JP Morgan's. This is due to regulations and restrictions that banks have to deal with that make it harder for those numbers to be up where Airbnb's are. Earnings per share for Airbnb are 2.25, and the stock performance January 1st, 2022 through the end of the year was a loss of 48.65%. You may be wondering, why am I recommending to get into a stock with a 48.65% loss in just a year? And the reason being that the start of this year, the NASDAQ has bounced back very strongly, up 13.62% year to date in just about a month and a half as I'm recording this. And over this period of time, Airbnb has bounced up 36.16%. So we've seen Airbnb really start to bounce back hard as the NASDAQ has recovered some of its losses from last year. So the hope being that as the economy continues to strengthen and markets rebound from the 2022 losses, Airbnb should be a company that is positioned well to bounce back. And finally, the sources that I use. Thank you for watching and have a great day.